my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, London UK feed wheat, and European processing potatoes. I'll start with Paris milling wheat. There was a lot going on here last time, quite a lot, and there is once again quite a lot going on here this time. First off, I asked the question some 7 weeks ago, and I quote, "Is this action since the May high a bearish halfway hesitation, or is it a lopsided, it's better if you discount the May spike down, anyway, a double bottom?" End of quote. Well, the answer is now clearly a lopsided double bottom pattern, an Adam and Eve type. We had an initial potential target in the 232 area with a secondary potential target X1 in the 236 area. Last week both target X and target X1 were achieved. Next, we had a chance for a monthly key reversal up in July. Well, that was also achieved, and I have no doubt has been a primary driver in this current move higher, along with the recent weekly key reversal up as well. Finally, the action since the low in July to date was indicative of a bullish halfway hesitation stroke bull flag type action with an initial potential target X2 for this pattern in the 229 area and a secondary potential target X3 in the 232 area, the same area as the one for the initial double bottom action. So obviously both targets X2 and X3 have also been achieved. There's a lot to comprehend there, so take your time, replay this video as often as you like until you can see what I'm talking about. Okay. So since last time we've also developed another possible small bull flag stroke halfway hesitation with the main body stroke flag being formed over last week. In this case both the primary target at 238 and the secondary target at 251 have already been achieved due to the fast rise of this market. Now this rise has seen three major resistances give way and now no doubt act as support. The 2007 to date downtrend, yes 2007. The 2007 to date downtrend currently at 244.70, 244 3/4 actually should be. The middle time currently 246 even, and the newly drawn late March to early July bullish Andrews for pitchfork, and finally the 2013 high at 253.5. Indeed, we have some clean resistance at 260, but we really don't hit anything of note until the congestion between 267 and 269.5 dating from late 2012. Now we do have a GAN number at 261, but I'm not that sure about that one. London UK feed wheat. There were two bullish patterns I saw last time that fitted reality, but both seemed tenuous at the time, to say the least. First is a bullish shift pitchfork for the July action. It is thin, it is acute, and I was finding it hard to have confidence in it at such an early stage or even to love it. However, this small pattern has dictated the bullish angle of attack throughout late July and all of August so far. Secondly, was to look at the July action as a bullish halfway hesitation. This was more promising, but still tenuous. The initial potential target X for this pattern was in the 188.80 area, whilst the secondary target X1 was in the 191.70 area. I regarded these targets at the time as doable, but target X sat just above the older 50% Fibonacci line of the August 2020 to May 2021 move at 188 even, and just below the more recent and more potent 50% Fibonacci line of the May to July move at 189.45. Well, target X was achieved last week, and target X1 was achieved yesterday. In the process of reaching target X1, the market punched up and now has two consecutive closes over the significant flatlining medium moving average, currently 192.05. And yesterday and today has tested the flatlining long moving average overhead, currently 195.75. So far, the market hasn't closed over the long moving average. This long moving average is the next obstacle in the journey higher. Watch for 2 consecutive closes over at the very least. European processing potatoes. I've said often, but I'll repeat it again, one of the features of using continuation charts on futures is that you occasionally get huge gaps after changeover. This market is an example of just that. The market was going sideways in the 13.8 area, then suddenly a huge gap up. Not that I'm complaining in the direction. As you may recall, I highlighted a bullish bow tie formation at the beginning of May, which would indicate a possible move higher about some 15 to 20 trading sessions after the, let's be honest, imperfect crossover of the moving averages. And the kick-in was due in between the 24th of May and the 1st of June, and dutifully we had such a move up, if only because of changeover. What is most interesting about the latest move up is that despite such large gaps, the bullish Andrews pitchfork for the November 2020 to March 2021 action is still valid. All that has happened is the market moved up from the middle tine, currently 17.7, tested the upper tine, currently 21.7, failed there, and went back down to the middle tine support at the start of July. Since then, prices have tried moving back up, but lacked the energy to really push higher to the upper tine again. And we're back down now at the middle tine, and its new partner adding further support, the rising short medium moving average, currently 17.6. Interestingly, prices have also stayed within a band between the support of the 50% absolute Fibonacci line at 17.5 and the Fibonacci congestion 18.5. However, last week there was a decent break higher to the next resistance overhead. Towards it anyway, the July 2019 to date downtrend currently at 19.8. However, last week also the market shied away from testing this downtrend, and we've ended up where we are now, sitting on the middle tine. Now this space between the downtrend overhead and the combined middle tine and short medium moving average below is now also getting narrower and will peter out at the end of September. So something has got to give way by then, if not sooner. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.